Obviously, there's probably a substantial amount of non-performing loans buried in the system for various reasons. But I think a transformation is underway, and I think it's going to accelerate for the reason that Jack already alluded to. They are now creating genuinely private banks. Some of them are up and running. A few more will be. They'll be very small. And we're seeing the rise of internet finance, which is going to be disrupting traditional banking to a certain extent. So I think more competition is coming in this sector, and that the allocation of capital is probably improving. Most of the credit in the last few years has actually gone to private companies, and the leverage ratio of these companies is actually going down, not up. So they're not highly leveraged.
I very much agree with that, but I think it's important that we acknowledge that in between the stories that Jack was telling and the stories that Nick is telling about today, there was a lot of regression and a lot of wasted time, a lot of lost time. I think the quality of China's capital markets deteriorated in the first decade of the 21st century. And so when we look at these positive signs today, I'm not sure if Nick would agree with this or not, when we look at the positive signs today, we're seeing hopeful signs that this regression is now being reversed and that we're looking at a more efficient capital markets in the future. But boy, we've got a long way to go yet. And just think in terms of bond spreads. I mean, if you can tell me what bond spreads are in China and what the relationship to the risk of the borrower is, you're way ahead of me in your understanding of China.
Can I put some of this regression in the context of the global economy that China was dealing with? Because I actually think that some of the regression, you might call in China, was actually a very responsible set of actions by China to basically hold up much of Asia and the global economy on a financial crisis that was caused by a highly liberalized, risk-sensitive, sophisticated capital market in the U.S. So I am not sure that I am willing to sort of accept this story. I mean, the story is that if you think about China as a responsible macroeconomic player, hit very hard and protected. They were protected because they kept their capital market closed, way beyond what we were giving them advice to do. They were protected from the crisis through capital market channels in 2007, 2008, 2009, but they were not protected at all by the trade channels. And they responded aggressively to shift by a stimulus package that at the time was correctly, I think, praised by the global economy as a significant contribution to bringing the world back from the brink of a Great Depression. That is what they did. And if they had to slow down the pace of financial market liberalization a bit to do that, and if they overinvested in certain things which will take time for them to grow out of, those were some of the downsides. But let's remember that the financial markets that we are urging them to adopt were the financial markets that brought down the global economy in 2007.
And let me just clarify just to clarify what we do and don't disagree about. I completely agree with you. The macroeconomic response in 2009 was a huge benefit to the global economy. No question about it. The rest of it.
But do you think so? Here, all right. So what's wrong?
There's a lot wrong.
Okay, good.
So in the first place, the kind of regression I'm talking about dates to well before the global financial crisis. The problem is really that after the restructuring of banks in 2004, 2005, reform stopped. And as soon as reform stopped, you start to see China's macroeconomic policy getting off base. And the fact that China creates inflationary pressures by 2007, 2008, that it gets a huge trade surplus, it's 9% of GDP, which contributes to global destabilization. I'm not blaming them for our crisis. We caused our crisis. But they had a tremendous opportunity to move during the very good times to a more sophisticated financial system. They lost it. Okay, nobody's perfect. That means today, as they revive it, they've got a big bad debt problem to deal with. That bad debt problem is more difficult to deal with because the economy is in this big secular slowdown, which is definitely partly managed, but also partly just an economy that naturally matures and ends its miracle growth phase. So they've got lots of great minds who will respond to this challenge, but still, I think we should recognize that it hasn't all been perfect when we look backward.